Hello, everyone, and welcome to this session in which we will discuss the balanced scorecard. The balanced scorecard is a system, it's a framework that's going to help the organization, help the company translate their objective, their strategic objectives into a coherent set of performance measures. In other words, we want to know what is our objective. What is the company's objective? The company's objective is to make a profit, is to generate cash. Cash through revenues minus expenses will give us the profit. So somehow we have to measure that performance. Now, one way to measure the performance, simply put, I just told you, revenues minus expenses equal to profit. Measure those through numbers. That's fine. That's one way to measure the strategic objective of the company. The balanced scorecard look at a comprehensive view. It's a balanced view of the company. So rather than just looking at the finances, rather than looking at the accounting numbers, the balanced scorecard will introduce other perspective that's going to help generate revenues, profit, return on equity, growth in earnings per share, the good stuff that we like. So what are those other perspective? We're going to look at our employees, learning and growth when it comes to employees. We're going to look at the internal processes of the companies. Are these being improved? We're going to look at our customer retention, customer acquisition, customer satisfaction. So we're going to look at everything: employees, processes, customers. And if we have those three, then we can achieve our strategic objective, which is revenue. Because relying only on revenues and accounting numbers, it has its own shortcoming, which we will see when we discuss the balanced scorecard. So I'm going to start by discussing the shortcoming of only looking at the financial perspective. Then we'll introduce the other perspective. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses, broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true false questions, as well as exercises. Go ahead, start your free trial today.
Relying on financial measures alone could lead to problems. Here's why. One thing we could face is something called myopia. Managers, people who are being rewarded, they might make decisions that boost short-term profit. Because if you are judging them based on the profit for this quarter or the profit for this year, what managers would do, they will do their best to do what? Reduce cost to increase profit, because that's what they see as short term. So, for example, you can cut down on your research and development. You can lay off employees. And as a result, you can reduce cost. And as a result, you could improve profit. That's great. You could improve earnings per share. You could improve the stock price in the near term. But as you cut down on R&D, you're going to have less product in the pipeline. As you lay off employees, you're not going to have enough manpower, enough people to do their job, especially if those employees are important to your process, are important to your product. So yes, you can save on employees, save on R&D, or cut on other things as well to increase your short-term profit. But that's a problem. This happens when what? When the measurement, when the performance of the company, of the managers, are dependent on what? Dependent on the profit. So that's why you don't want to emphasize too much on profit alone. Also, focusing on financial measures, profit, revenues, could be unfair rewards for lower level employees. Why? Because upper level employees, they might have stock options. Rewarding only top managers based on financial performance can demotivate frontline employees because they don't have enough stocks. They don't have enough ownership in the company. And those are the individual that plays a crucial role in customer satisfaction and customer relationship. But what do they lack? They lack that significant stock holding. So telling them, you're not doing a good job because the stock price is not doing well, that's not related to them. It's an unfair way to reward them. So earnings per share and the stock price is meaningless for them. Therefore, that's another problem with financial measures. So we have to find another way to reward or to make them feel included. Also, financial measures are lag or lagging indicators. Now, from econ, you should know what lag or lagging indicator. They come after the fact. For example, when you prepare the income statement is prepared after the year has ended, after the quarter has ended. So what we're looking for, we should be looking not for lagging indicators, we need to look for leading indicators. We need to look for signals that's gonna guide our future performance. And this is why we need to use, rather than the traditional financial measure, this is where the balanced scorecard comes into the picture. Well, the balanced scorecard addresses those limitations by incorporating multiple performance indicators. So yes, I am going to look at your financial performance, but that's going to be only one of the things I'm going to look at. Yes, I'm not throwing it away. I'm not ignoring the traditional measures, but I am going to add 3 critical perspective to your performance as an employee of the company. And those are, I'm going to look at your learning and growth, I'm going to look at the internal process perspective, and I'm going to look at customer perspective. What does that mean? It means I'm going to make sure you are well trained, you have a growth mentality as an employee of the company. And as a result, once we achieve this objective, once the employee is well trained and they have a growth mentality, they understand the business, they understand where we need to go, the next thing they are going to do, they are going to improve the internal process. They're going to create a better product. They're going to move faster. They're going to find ways to reduce cost. That's great. As a result, when we have a better quality, that's going to affect the customer. Now the customer is happy, the customer is going to buy more. So taking learning and growth plus internal process perspective plus customer's perspective will translate into the 4th perspective, which is the financial perspective, what we call the traditional perspective. So what we want to do, when we want to judge managers, employees, we should not only look at the financial perspective. The financial perspective is the result of the other 3. So let's take a look at the other 3 in a form of the balanced scorecard, and we hope that having those 3 other perspectives would lead to the 4th important financial perspective. So we're going to go through each one of those perspectives separately to explain them, then we'll put them all together. Starting with learning and growth perspective. What is the objective here? Here you want to measure the organization ability to innovate, improve, and learn. So you want to find a way to basically keep your employees well trained. As a result, they are using new technology. As a result, they're improving the product. As a result, they're learning, and this process feeds itself. Why? Because that's going to underpin long-term growth. You want trained employees. You want smart employees. You want innovative employees. So how can you measure this? You could measure this by providing training, how many hours of training you're providing per year, and training and development. Knowledge management, are you providing the tools for employees to learn? Maybe run a survey to determine if your employees are satisfied. Also, employee retention is another measurement of this. If employees are not leaving the company, that's a good sign. If the employees in the surveys are satisfied, that's a good sign. If you are providing training, that's a good sign. But this is how you measure the objective of innovation, improvement, and learning for your employees. And the purpose of all of this is to make sure the organization is building capabilities and fostering an environment of continuous improvement and innovation. So that's the first perspective in the balance scorecard, the first perspective. And basically, this is the bottom line. Once your employees are well trained, guess what's going to happen next? We want to assess the efficiency and quality of internal processes that create value for customers and shareholders. Well, guess what? Once you have a well-trained workforce, that's going to translate into a better product. That's going to translate into a more efficient process. So how would you measure this? Process efficiency, cycle time, how long it's taken us to finalize a product, to take it from A to Z, from research and development to deliver it to the product. Quality rates, how well customers are rating our product, or how well internally we are measuring the quality. Do we have a defective product? Innovation process, are we saving time as we are producing? So this is how you would measure this internal process perspective. And the purpose here is to do what? Is to optimize internal operation to improve product and service delivery important, reduce cost, and enhance overall operational effectiveness. So once you have the first perspective done, learning and growth, this should come next. If your employees are well trained, it should translate into a better internal process perspective. Once you have 1 and 2, you should have, if you have a better quality goods, less complaint, less defective product, customers are happy. Here you want to evaluate how well the organization serving its customers and market. How would you measure this? Customer satisfaction survey. Retention, are you keeping your customers? How easy to acquire a customer? What is the market share? Do you control 20, 30? Is it growing? And what is your customer profitability? Per every customer, are you making more or less profit? So you could measure this customer perspective. Send a survey and customers will tell you. Monitor your reviews online, on Google, on Yelp, on your website, on different tools. Customers, are you retaining the customers? Are they staying with you? Are you finding hard time finding new customers? Because if the current customers are happy, they're going to tell other people, which is great. And customer profitability means what? It means how much you are making profit per one customer. Again, the purpose of all of this is to align product and services with customer needs and expectation. You want to take your product and making sure your product are satisfying that customer. And here you are fostering customer quality and growth, because that's going to help you with acquisition, help you with retention. So that's the third perspective, and this should comes after your employee are well trained. You improve your internal process, and once you have the customers happy, guess what it's going to translate into? It's going to translate into a financial perspective. Measure financial performance and assess the economic consequences of actions taken. Now you look at your revenue growth. Is your revenue growing? Of course, if your customers are happy, your revenue will be growing. You'll have more profit. Your return on investment will go up. Your cash flow will increase, and the economic value added will increase as well. If you can make your customer happy, retain your customer, and acquire more customers by reducing costs and improving quality. So the purpose here is to make sure that the company's strategy and execution are contributing to the bottom line, keeping stakeholders and investors satisfied. Stakeholders are part of your customers. You want to keep your customers happy, your investors happy. And this is the fourth perspective of the balanced scorecard. So let's go ahead and summarize everything that we just did from the earlier 4 slides. We have the 4 perspective: learning and growth, internal process, customer satisfaction, and 4 financial. In a learning process, we'll train our employees to enhance their skills. For example, we train them on the use of technology like artificial intelligence. We communicate the strategy so the employees understand what they need to achieve. Once this step, this is not the complete list, of course, you can do so many different things, provide them with tools. Then the employees will enhance the product innovation, improve quality, and improve productivity. Once that happens, we have a happier customer. We could reduce order filling and delivery. We could increase customer service satisfaction, and we could increase the profitability per customer. Then here comes revenue growth and reduction of cost, which will increase return on investment and increase the stock price. So notice what we did. We went from step 1 to step 2, step 1 and 2 will translate into step 3, step 1, 2, and 3 will translate into step 4. The old traditional way was for the company just to look at the financial and ignore the other 3 part of the balance scorecard. And this is another picture of it. Again, first, invest in your employees. Once you invest in your employees, you're going to improve your process. Once you improve your process, you're going to have a happier customer. Once you have a happier customer, the company will make more profit. So this is a broader view of the company's performance by integrating multiple perspectives. It starts from the bottom, and the bottom is your people, your employee, and eventually will end up with achieving your financial goals. Now, the best way to illustrate this is to actually work an actual example. In the next recording, I will work a real case, Southwest Airlines. How did they implement the balanced scorecard to achieve their objective? And what's their objective? Number 4, increase revenue, increase the stock price. What should you do now? You want to go to Farhat Lectures, look at additional resources, lectures, multiple choice. That's going to help you, whether you are a CPA exam candidate, accounting students, CMA candidate, or just growing professionally. Invest in yourself. Good luck, study hard, and of course, stay safe.